Welcome back to the InsurTech stage here at FinTech Live New York. Our next discussion for you will be the Insurance Transformation Forum, which will look at all things involving replatforming and digital transformation. Our guest moderator is Lisa Wardlaw, founder at 360 Digital Immersion, a highly experienced insurance executive who is helping companies to build and execute digital strategies across the insurance sector. She's joined by Sabine van der Linden, co-founder, chief executive officer, and managing partner at Alchemy Crew, a venture lab that helps accelerate new tech business models. Also, Samantha Chow from Capgemini. Samantha is an expert in the global life, annuity, and benefits markets with more than 20 years of experience. Last but certainly not least is Frank Devine, Global Head of Open Innovation at AXA. Frank sold his first internet business in 1999 and joined AXA in 2012. He now leads all the open innovation activities of AXA Next. You can read the full biographies of all of our panelists in the event app. But for now, I will simply welcome on stage our speakers and say to Lisa, good afternoon. The floor is all yours.
Hi, Alex. Thank you so much for the intro and welcome. We're so excited. So first of all, I would just like to start by saying we're coming to you literally from around the world. So I was thinking about this last night and first of all, I'm so excited to be covering this topic on static versus dynamic. And I just wanted to, I'm coming to you, actually, I'm in Hartford today. So I'm coming to you from the East Coast of the United States. And I just wanted to just quickly let each of our panelists say where they're coming to you from live today. So Sabine, maybe start with you, then Frank, then Samantha, and then we'll get into this.
So hi everyone, I'm from London, United Kingdom.
Calling from Southwest France.
And I'm calling in from Tampa, Florida.
There we go. So coming to you live. Thank you so much for having us, FinTech Live. I think that as we kick this off, so this group, thank you all for being willing to participate in this. This group on the phone today that we have live we are leaders thinking about, what is really going on in our industry. And as you probably heard from Alex's warm introduction, not only do we spend time applying the concepts for our customers, for our corporations, for the people that we work with, but we also spend a lot of time identifying patterns and identifying these patterns from a thought leadership way. And then how do we apply the patterns that we're seeing? So one of the big patterns that all of us coincidentally in different ways started identifying, and then we're pulling the four of us together, is this concept of the insurance industry moving from static or point in time to dynamic. Okay, so what we want to do today is take you through a little bit of the background. What does that mean? Frame it up for you. And then, of course, we're going to deep dive into this through a couple of rounds and then leave time at the end for audience Q&A. So I will remind you that there is a chat feature. And if you want to fill some Q&A in, that we will make sure that we have time to address any audience questions. So without further ado, let's talk about, we use these words, static and dynamic. What does that really mean? So if we break that down, if we think of static, it's really, I'll just take a definitional version of this, right? Which I actually love this definition. Webster's did us up right on this definition. But really static means lacking in movement, action, or change. And you could say, well, we're always evolving. I'm not actually talking about the industry and evolving products or things like that. I'm talking about we've always done everything as a point in time. So and this was not because we wanted to do it that way per se. It was really because technology and the tools and enablement that we had meant we do things at a point in time. So if you think about that, think about like risk as an example. We take a point in time view of risk. And I'm going to let our panelists cover all this in a minute. You're going to hear their reflections, but I just want to make sure we tee up the definition. The definition of dynamic then would mean of constant change. Something that does not sit idle. It's constantly in motion. So I think of an atom as a good example. Atoms are constantly in motion. So, and of course, if you think about something like risk is by definition constantly in motion because we are always doing things. We live, and as we do things, risk evolves and is constantly changing. And our technologies and our enablement of understanding things that are on continual movement has evolved significantly. And so we're seeing this pivotal shift in the industry of, okay, Traditionally, we could only see things at point in time, and we would update it maybe on some frequency, some point in time, but again, in a static update way. But now we have real-time processing available to us. So how do we apply the capabilities to be real-time, to be streaming enabled across every function line of business that ultimately enables us as an industry to continually evaluate risk? Now, I would say, you're going to hear from our panelists, we've seen some traction. So the good thing is, the reason why we've identified this as a pattern is we are seeing movement in this area. The thing that we would like to extend this today, and we want to kind of share our lens on this with you all, is how dynamic capability can be more deeply entrenched into traditional functions. So we're going to take you through a journey of what our panelists are seeing. And I guess what I'd like to do is start out by, giving each of you, Sabine, Sam, Frank, each of you all a moment to reflect on what are you seeing. So quick intro, how you are seeing dynamic trends and patterns, ideally across things like data, across things like risk selection, we could call that underwriting or risk selection. And then of course, across things like business models, circular business models, new target operating models, et cetera. And I'm going to, Sabine, why don't you lead us off and just a little bit about, your area of focus here for the audience. And then, we'll get into deep conversation. So welcome everybody.
Thank you, Lisa. So I'll just dive straight in from your question, looking at static versus dynamic. But I would like to set the tone around some of the things I've seen today. As you know, I'm in London. I was not able to come and be with you today because I had commitment here. But the way of static and moving to dynamic is today, I think, changing the way we work, meaning that everything is leveraging data and forces us to do things which are much more real time. So therefore, we have a lot of things coming at us and we have to make decisions much faster to fulfill the need of our customers. The second point is dynamic data or dynamic stuff is actually pushing more inequality and biases in society. Unconscious bias come from the usage of data, the data not being always well configured, and therefore making choices, maybe risk selection, or eliminating people from that risk selection because we didn't account for that group. The last point I would like to make is advanced algorithm, dynamic, also have a significant impact on the environment. And this is one of my favorite topics, as you know. When you think about environmental risk, flooding, wildfire, earthquake, and so on and so forth in commercial lines, these environmental risks are dynamic more and more, right? As floods happen, we want to be able to predict and prevent and alert people to take and make better decisions. So I'll start with that around where do I see the three topics I mentioned around the dynamic world we are entering.
I love how you start at such a low bar. I mean, the queen herself, only Sabine comes in and she's like, we're throwing down, here's the top three. So with that, we're going to come back and let everyone iterate on this. But I would love to hear, Frank, you've got a tough act to follow. And I also want to notice how many women are on this panel. We've got you and so look at us representing here on that note. But Frank, you're one of the, honestly, from the moment I've met you, your mind in this space is something you can't even get out of a taxi with me without me being like, Frank, let's keep talking about this. So we'd love for you to tee it up for everyone listening in today. Sabine set the bar high. What do you think about this?
Absolutely. Look, for decades, insurers were using historical data and have a statistic approach, as it has been said, to identify patterns, to define models, to, at the end, design an insurance product based on those static data, notably, at a point of time, as you said, and then pass it to distribution and wait for claims, or hoping that only a few will go through. And I think here that real-time data, and we all produce tons of data now, and this is bringing a very new approach to risk evaluation, to risk assessment, to risk underwriting, to risk management, and also going to claims settlement that's now require a kind of being very immediate, I would say, to get the compensation. The first time I've been seeing real-time data and underwriting use case in the insurance business is in the B2B2C business, in what we call now the embedded insurance. So I've seen that back in 2015, looking at Chong'an Tech in China, and notably by doing those partnerships with on-demand websites or e-commerce platform, and bringing new coverage for a new type of risk, and helping actually the partners to increase the conversion rate with the data of the customer, and trying to better serve this customer. So look, you are buying a pair of shoes, it's maybe not your right size, you are hesitating, and then you are clicking on an instant coverage to make sure that you will get some compensation in case you want to send back the pair of shoes. So typically that was very small pocket product, I would say, but with this idea of making new type of services with real-time data, real-time insurance coverage, which is going to end when finally the customer is saying, okay, I'm good with the stuff I've bought, with the risk disappearing at some point on your balance sheet, right? So yeah, I'm very interested by those use cases. Could be on travel, on cyber, on climate, but we will discuss this further later today.
All right, so we're going to round this corner. So, I mean, I was smiling, of course, intensely when you were talking, Frank, because I think where we saw it start, right? I'll call that Gen 1, was how can we take this real-time data? And I love that you had an example that was, at least a decade. How do we take this? Because you're always on the cusp of seeing these trends, and of course you're always applying them. So real time. But seeing those trends and then seeing them permeate into products, but now we have even more capabilities. We have even more. We're going to get into some of that when we get into some of the, I'll call it part 2 of this round. So we started with Sabine on commercial. We rounded around to Frank with embedded, and he's seeing with like real-time consumer product design and pricing and risk selection. Sam, let's take this into the world of life, because I think we often intentionally bifurcate between property and casualty and life. And I think the 4 of us on this panel believe that the dynamic nature is actually going to break down these intentional separations, because, by the way, we as humans, life and our other actions are actually connected because we interact as one. So Sam, would love to know your reflection on this as well.
Yeah, no. So again, I bring the life insurance perspective here. And I think that, shots in time, I fill out the application. Here's my health information. Here's my prescription information at that time. Here is my, my physician's statement at that point in time. But as we've come into the world of, say, wellness, right, where we're all having these wellness programs, and where, John Hancock's, the Vitalities and Manulifes of the world are out there trying to push, how do I do well? How do I make myself better? How do I prevent things, preventive care? That's when this idea of dynamic comes into play. Yes, I think that if I have to look at the differences between the P&C world and the life insurance world, the regulatory environment and what keeps us from being truly dynamic in real time, and what data we can use and how we can use it. I mean, we're experiencing now, like with Colorado over here in the US, and the regulatory restraints they're trying to put on that type of personal information, whether you share it or not, is making it a challenge. But Lisa, I'll bring it back full circle where you say we're all intertwined. When I think about dynamic, okay, it's COVID. I mean, hey, you can't have a webcast or anything without bringing up COVID or the pandemic, right? I mean, but it's okay, this pandemic hit. What are the ongoing changes we're going to experience from a health perspective from people that had COVID once, twice, 3 times, of those that had the vaccine once, twice, 3, 4 times, right? And how do we need to be reflexive and dynamic with those changes? But more importantly, Sabine, back to you, earthquakes, floods, geographical presence, as these catastrophic events start plaguing in different areas than they are typically used to seeing, how do we take that geographical information and put it into a high risk area to also apply that if you're seeing forest fires shift from California, or flooding and mountain collapsing over in California, now you're seeing in Mississippi or wherever here in the United States, all the tornadoes in Texas and all the things that are happening. Fort Lauderdale, for Christ's sake. I mean, we're used to rain. What happened? I don't even know. I don't even understand. But that is where the dynamic underwriting comes in. So how do we take not just the health data, the IoT data, all that, and build it in to continually make sure that we're offering the right products and underwriting the right risks, but we're doing it for the right reasons for the right person.
I love the way you wove all that together, Sam. Thank you. And one thing that I was thinking about is it's not just the verticals of our lines of business. Even within each line of business itself, even if we took property and casualty and life, there's of course a bazillion different sub breakdowns, and it's not just dynamic data, but it's almost dynamic information. And we in our industry need, and I'm envisioning those shows where you walk around with the glasses and you don't see like the people, but you see there's so many great commercials about this. You see thousands of different data points, as they're walking, in the street, or they're driving, whatever they're doing. And what we are really facing now as an opportunity in our industry is we can now have the aptitude to not only know that all that data exists, but we can obtain that data. And so even, to some of your points, Sam, about there's regulatory, there's all these things, but there's also techniques that are coming out that are enabling us to have these data points, et cetera. But it's really this continual data point, which transforms then into a risk score, risk analysis, risk monitoring, however we want to tee it up. And that's, I think, one of the consistent themes about, I'm going to actually label that dynamic enablement. So we've now moved into this world in which this data is available to us. We can interpret that, score that in all sorts of different ways, and create this dynamic enablement form of insurance, which can lead from everything to new products, to new processing, to much better bifurcation of risk at a more precise level that can ultimately lead to better coverage and pricing. And Sam, with all the nat cat stuff you just mentioned, right? There's a lot of people, if you just take a broad-based approach, companies would traditionally have to pull out of certain types of coverage, of certain areas. Clearly COVID, I was actually just talking to somebody last night about COVID and COVID impacts, over lifespan. I was like, yeah, we were thinking about this back in, 2020. And so now there's companies and startups that are actually tracking that. But let's go into the second part of this, which, for me, it's okay, this is all great. And we have so many initiatives that we talk about things and ESG and sustainability, but how do we really get into, what I'll label as applied sustainability? So if we have all of these data points, all of the capabilities to let's within a world that's regulatorily, aligned, right? So we can't get things that we can't get. But, we have massive amount of corporate responsibility, because how we set that up, how we construct that, has immense implications on. I was just talking to somebody the other day about just like the absolute compute power, whether you're in the cloud or not, has a massive effect on the energy that we're using to drive some of these things. And I know we're all thinking about this. So what I would love to do is think like, okay, how are these dynamic capabilities really getting into, are you seeing it? So first of all, are you seeing companies focus on the sustainable aspects of this? So, and by the way, of course, for everyone in the audience, we're going beyond carbon credits. We're going beyond our footprint here. Now we're really saying, okay, those are things that, of course, from a almost, again, like a pure or linear climate lens, everyone is focused on. Check. And we know that that's hard. Now, what I'm asking you all is it too much? And if it's going to be too much, how are people thinking about applying this in sustainable ways? And maybe I'll jump over and start with Frank's lens on this, and then we'll pivot to Sam and then Sabine on, like okay, are you seeing it? How are people thinking about it? And of course, I'm sure the audience would love to know, what is innovative that people are doing? Like, what do you think is kind of cutting edge thinking here? Who's leader of the pack in terms of thinking?
Yeah, I think so. So to answer your points, first of all, having access to all those set of data, training models with those data, we will need our actuarial people and data scientists guys. We need at some point to find what are the relevant data, how accurate those data would be to according to the risk or the type of risk that we want to cover. How those data flow would at some point trigger the compensation automatically. And here I'm thinking about what we do in the parametric insurance space, and notably for climate change with big risk, and we actually automate the process from selecting the key data that will trigger the compensation. This is about parametric, I would say. But then here it's finally not consuming too much of tech and too much of data in a sense where I believe those parametric models are more sustainable than just computing tons of data for at least we don't know exactly what we would do with those data, right? So accuracy is one of the first point. And then for me, the other one, if we want to make this sustainable, it's actually on going further in insurability of things. You were talking about health and catnats. Those two areas where we definitely need to access to much more data, but in order with the aim of ensuring what we were not able to insure by the past. So it's not replicating existing insurance coverage, but really going further. I'm thinking about during confinement, and we were looking at how much exposure we got on this, notably for business continuity insurance. So there are a couple of things that, thanks to those data, we would be able to do that we were not able to do by the past, with the sustainability goal, I would say, in front of us.
So that's a really interesting lens. And Sabine, what are you seeing in that regard?
So
sorry, I'll come to you in just one second. I just wanted to kind of cue off that.
Sure. So what I was going to say to answer, or to combine my answer with Frank's statement, what I see when I interact with insurance company, there are two things they are asking often when we look at environmental risk and the risk I mentioned earlier is accuracy and quality of data. And what we've seen is a lot of companies have been trialing geospatial data, actually. And when you actually go under the cover of geospatial data, you have amazing providers out there. But when you look at it from the insurance viewpoint, they are looking for high accuracy and high quality depending on the risk they are dealing with. So if we are dealing with flooding risk, for example, we need to have the information near the asset, the building, the car, working out where they are. And when you have floods, which are dynamic risk, getting access to that data is actually quite expensive. And if you want a 15 centimeter data feed, this is a fortune. And that is one thing I started learning as I spent a lot of time talking to geospatial providers, and many of them have been really kind to explain to me what is possible and what is not possible. So when you do flooding and you have to actually look at massive areas, you cannot ask for 15 centimeter resolution data, for instance. However, if you are looking maybe at wildfire, and you have a very contained asset, it's easier to do that for wildfire. So you have all those data providers providing that geospatial that you combine with the insurance data. But then you also have to look at whether you are doing underwriting or you are doing with claims. And with claims, you start going into Internet of Things, asset sensors to be able to get the data, to create prevent and predict. Predict first and prevent. And so letting people, by knowing there is something happening, giving them an alert, maybe getting them to move the car, maybe getting them out of the property, right? If there's something major happening.
So Sabine, like you can't say the word geospatial and I don't be like, gotta jump in. But and this is actually gonna connect to life too, because geospatial, of course, like where people are, geolocation and geospatial data is hugely impactful. But on one hand, there's this layer of cost, affordability, compute. What do you need? And Frank mentioned this too, like really knowing what you need for what point, which is interesting because just remember, we didn't really need that data for those points because we were handling it in these static ways, which is where I almost talk about generically. It's like we've got piping and plumbing valves that no longer retrofit together, like the fluidity. It's like we can now have this all coming in, but the thing on geospatial, the next layer down that I find really interesting, and I would love to know if you're seeing any of these trends, and I would actually love to know if anybody's seeing this. In and of itself, almost every solution that's available has, I will say from an applied sustainability perspective, I've been studying this for about 18 months, a layer of redundancy. And let's just call open source data. We could take open source as a generic concept. We could take it for life. We could take it for all the things you all have been talking about. Because there's so much open source information available, everybody has to consume that. So there's a consumption sustainability here now that it's dynamic. There's a processing, pre-processing, post-processing. Let's just ignore the lineage and harmonization of this across your enterprise. But just the obtaining of that data, the transformation of that data, the computing of that data, all of this. And that is now being done by almost every provider that's offering, I'll just stick with geospatial solutions. Are you seeing people look across their enterprise and say, let's just make it up, I'll use a number. We have 20 geospatial solution providers and they're all getting geocoding as an example, right?
Yeah.
And so that's being done by 20 people. Even if we keep it just super simple, like we don't pay attention to their ecosystem partners and all the other people that are getting that data. How are you seeing that people's thinking in that? Because if you just think about the compute alone, the power of that, like how are you seeing people as pioneers in their thinking on this? I'll call it applied sustainability.
Yeah, I mean, they are leading, and probably Frank might want to answer that, but I think leading insurers, Fortune 500 global, are actually wanting to solve the problem, because if you can solve the problem, you can actually do personalization, and then you can retain your customer. And if you look at commercial, big companies, everybody is after, a big player, getting them to shift from one insurance provider to the other. And so the way you actually potentially create more stickiness is by personalizing the offer and providing a better service. Now, I do see many players, evaluating a lot of different platforms just because of the problem they are trying to solve for. And when you actually look at it from the compute things, one thing I think we just need to be mindful is most of the cloud providers have been building on green data centers now for quite a while. And so, when we actually start talking about data and cloud and green sustainability, applied sustainability, they would say, we've been working on making sure that we have a sustainable approach for our cloud compute and the data we process. But the challenge is, because insurance companies are trying to find answers, they have to try different application. And I think one thing which is missing is, do insurers need to have access to all the geospatial, or do they go to a provider which is let's say an aggregator or an orchestrator, so that they are the one answering the question? Because then you're actually doing applied AI, applied or embedded artificial intelligence, where the platform which are using all this magical data and AI is able to start providing the answers to very specific questions.
Totally. I totally see that. And, not to tip a hat on where M&A strategy and things like that may go, but, I always talk about it as like the Lego blocks, and how would we buy, acquire, and assemble. I mean, yes, I would love to get my hands on building those 3-in-1 kits. But Sam, how are you seeing this from your perspective?
So we think about a life insurance perspective, and I'll carry on kind of the conversation, but then I want to take literally a hard left, or a U-turn maybe, and go backwards. But when you think about like your geospatial and the number of platforms and people that are out there processing that data, think about all the lifestyle data that is the same thing is happening, right? All the Apple Watches, the Fitbits, right? The rings. I don't have one, although I want one. But like the beds and all these different IoT devices. Layer into that all those companies out there that are trying to do electronic health records, right? They're all fighting for the same data. They're processing the same data. They're doing over and over and over and over again. So where's the sustainability and that?
Same scenarios, right? Like, be careful what you wish for. Mm-hmm.
Exactly. I mean, we want it, but we have to think. I mean, somebody's going to have to start thinking sustainable in that aspect. But yes, we're experiencing that. Same problem. Different type of data on the life annuity benefits, pensions, and even healthcare side, right? So, but if you kind of take that U-turn, right, the life insurance industry is pretty far from creating sustainability. So we're not necessarily talking about the carbon footprint, but we are. Let's be honest. Going out and printing out, the RX data to underwrite and and scanning it back in. This is still happening today, by the way. Scan it back in, so it goes and uploads
that.
All right, it goes back into the file, so it can be attached to that person, right? Or their attending physician statement. You got it from a doctor. You can't just drag it and drop the PDF. You've got to print it and rescan it. A mess. So when it comes to data, or the ability to extract data, even from unconventional forms, even handwritten documents, which we've gotten so good at, every little bit that we do in that area is sustainability. So a lot of life carriers they might have an IT sustainability direction, right? But their business and operations don't, because of the fact that everything that they do, every process that they improve is creating a better sustainable environment for them, right? So every time they automate something, or automate that kind of drag and drop feature from, an email PDF over into that person's policy record. That created, sustainability. We're no longer printing the paper, right? The scalability, but even further back, the life insurance industry is plagued with a little bit more than I would say the P&C industry is when it comes to IT and technology. The legacy systems that they have, I was talking to a carrier the other day who shall not be named, but 190 legacy mainframe applications. 190.
That's not an outlier, right? Like that, let's just be real. That's a representation of the industry.
It's a representation. Right? I mean, I've seen more, but right, 190. And so, yeah, we need some cloud movement. We need some collapsing. We need some, you can't lose that data, unlike P&C. I mean, you can go back, you can create data of, historical events, right? Just in general, geospatial events, but at the same time, you can't do that with, each person's history, individual person's history is data that is needed for the future, right?
That's fascinating, Sam. Just like on that, I was literally having this conversation last week, and I called it inception to date processing.
Yeah.
And so if you think about it, the one area we've always been different because of long duration nature of life insurance is we've always done full inception to date. So end to end reprocessing on a life, on a record, et cetera. But if you actually think about that as kind of a lesson to be learned, where we're going with dynamic streaming could actually enable everything to be inception to date if we don't find almost strategies to leave the data and pull the data in upon use, upon consumption, right? And so before we jump to audience Q&A, I'd love to know what you all are seeing in that area and as a team, and then we'll move to audience Q&A. So maybe Frank, I see you leaning in. Let's see what you're seeing in that area.
Yeah, but there is two questions actually. So one is with those real-time data, those data consumption, I think the main goal is to go to prevention, from insurance to prevention. That doesn't mean that with those individual data, we would do too much of personalization, because here we might lose the mutualization of risk actually, and so I think it's important to still get those data, but to really prevent those events to happen, so help those people to get new behaviors with the real-time data observation, I would say. And I think that is happening right now. Concretely, there is a shift. We are, for instance, at Taxa Climate, selling risk consulting and explaining to corporate clients. We have set up a DCP, a digital commercial platform, to connect our commercial line clients with their own risk assessment with satellite images, etc. But mainly to prevent the risk than just to have an impact on the insurance coverage itself. And then the second question on cloud, everything on cloud and legacy system, etc., that have huge consumption. I'm in favor of putting this in all those open source data into a shared and distributed ledger, as we used to say, on the blockchain technology, that would make at some point the data safe and secure to everyone, but that would distribute actually the insights of those data without the giving away the confidentiality of those data. And then I would say, if we have all those data on a ledger which is distributed and everyone can get access to the insight of the data, that would maybe be a solution, a more sustainable solution for everyone.
I love that thinking, Frank, and I think that clearly the four of us could talk about things like forever. I'm seeing us like actually design some architectural solutions in real life here. I love where this is going. So I think like let's let's pivot to take the audience questions for the next few minutes. And I think that the theme here is there are solutions available, and thinking beyond what you traditionally had in your, in your kind of conceptual models and your blocks. What I would say is, you just heard Frank bring in like on the chain, et cetera. So really challenge yourselves and your organizations to think beyond what you have today, because as you heard, the dynamic and vast amount of information that we have available to us to enable and serve our customers better is there. So we have to be really strategic in how we set up things, because if you set it up in these traditional ways, it's not going to support the dynamic nature of where we already are, if I could say that.
Lisa, I just want to add one point to Frank's statement. Two things is, Frank, you highlighted business model changing, right? You, as an insurance company, we are doing consulting, monetization. Second, circularity, right? As we talk about applied sustainability, we need to think about circular business models as well. And so a lot of the technology which is out there, it's not just about replace, it's about upscaling and recycling. So I will keep it there.
Awesome. So let's see if we have a question coming in. Alex, hit us up.
I am back. Thank you, everybody. That was a really great discussion. So Suresh says, insurance premiums have been going up, as we all know. Would somebody like to talk about innovation in underwriting, driving down costs and lowering premiums? And if nobody volunteers, I'm going to pick an unfortunate victim. So would anybody like to volunteer to answer that question? Sam, go for it.
All right, I'll take it from a life perspective, because listen, we can go through and change our underwriting processes. We can add in this dynamic data, but that is a long tail. You don't know what your experience is in that, how you've changed the underwriting process, the data you've ingested, et cetera, for many years to come. The way that the carriers are going to reduce their overall costs are to focus on their processes, automation, reducing their technical debt, and getting into a more scalable environment. Then those can be passed on. And as the experiences of data and this dynamic data that we're talking about impact their experience and mortality rates and all that, then you can start to change as a result of underwriting, not before.
Okay, thank you. I've got a question now, which is a bit of a round robin for all of you. So as briefly as you can, Giang asks, what are some of the most exciting insurtech innovations you've seen recently, and how do you think they impact the insurance industry? So that's probably a good place to end the discussion. Could we all go around in the group and say what our most exciting insurtech innovations are? Sam, we ended with you, so we might as well start with you. Thrown right into the deep end.
Yeah, right into the deep end. I you know what? I don't know that I could name just one insurtech. I really, there's just so many. And a lot of them I wouldn't even call insurtechs anymore, because they're kind of been around for quite some time. So they've lived and learned on their mistakes, and they've evolved from there. But when I think about what Surify does for that whole technical debt with their Core Connect, and the reduction of that technical debt and those legacy components, that's one I'll call out. And then, wellness, and Decadu, and again, they've been around for a while, but they've done wonders for the life insurance industry and benefits industry.
Sabine, what about you? Can I bring you into it?
Yeah, so I will leave probably the geospatial stuff to Lisa, because she's the queen of geospatial. So I'm going to move to travel. I think what I found, because I had to do a talk around travel just 2 weeks ago, one thing in doing the research is, you have different models coming through: niche, insurance, on-demand, parametrics, embedded, and DeFi-enabled insurance. So the startups I would mention would be Blink and Patterns within parametrics. Embedded insurance, we have C2, which actually I think they merged with Pattern, and DeFi enable insurance will be Etherix. All of them using insurance in different ways, using a blockchain sometimes, but trying to get it real time for us right now.
Okay, thank you. I think one of our next speakers is going to be very happy with you. Frank, what about you? What's your pick?
Yeah, I won't name those companies, but there is one which for me is really interesting to link the insurance risk portfolio with the capital market directly using technologies, obviously, and then using capitals to insure people and then to get a yield from the other way around. So which I found very relevant.
Yeah. Yeah. Frank, I'm actually thinking, I think I know exactly. Anyway, yes, and because I was gonna like end on saying like, listen, this is gonna like becoming dynamic is gonna become table stakes. And so to Sam's point, you've got to move from like the only thing I would caution is if you spend too much time in automation, you're not going to get to dynamic. So like you have to run parallel. You cannot do waterfall. You absolutely cannot do waterfall in this. And the outcome has to be that we're able to create dynamic risk exchanges, capital placement, algorithm exchanges, risk exchanges. I would see that mostly what I see in the insurtech world is a lot of intentional bespoke point solutions. But because insurtechs by definition aren't really doing like end to end, and I'm not saying like there's not insurtechs like that are full stack carriers, but they're solving a discrete problem. And I still think it's the enterprises that are trying to put together this holistic solution. The dynamic risk exchange, I think, will be the ultimate. And so, to Frank's point, and to Sapine's point about circularity, and to Sam's point about making sure that we got to get like ducks in row to get there, because the life data with trends that we're seeing in longevity will play into this continual risk exchange. I could say supply chain for geospatial. So it's not just enough to predict and prevent, but let's create a hedging exchange where we pre-purchase materials and supplies as the events in advance of them unfolding. So we really start to infuse concepts of, which is perfect to end on for FinTech, financial technology and insurance technology. And I guess I would just like to say quickly, thank you, audience. Thank you, panelists. I mean, we could go on forever. Sabine, Frank, Sam, like having this discussion with you is just so energizing. And I'm so lucky to not only know you, but to know that there are pioneers in our industry. It's not easy to drive the things forward that you all drive forward. And I'm just super appreciative of your time today. So Alex, thanks for having us.
No problem. Thank you very much, Lisa. And thank you to everybody who joined us for this panel. It really was an excellent discussion. We've got to go to a short break now, but we will see you in a few minutes.